Hi everyone, welcome to our channel. Today I have a very important topic for you: 6 assets that are better and safer than cash. Cash is convenient and easy to use, but it also has some drawbacks. It can lose its purchasing power due to inflation, it can be stolen or damaged, and it does not generate any income or growth. That's why it's smart to invest some of your money in other assets that can offer more financial security and opportunities. In this video, we will show you 6 of the best assets that you can consider investing in. Let's get started. The first asset that we recommend is stocks and equities. Stocks are shares of ownership in a company. When you buy stocks, you become a part owner of that company and you can benefit from its performance and profits. For example, if you bought 100 shares of Apple at $100 each in 2013, you would have spent $10,000. Today, those shares would be worth over $150,000, giving you a return of more than 1,400%. That's much better than keeping your money in cash, right? However, investing in stocks also involves some risks. The stock market can be volatile and unpredictable, and the value of your stocks can go up or down depending on various factors. That's why it's important to do your research, diversify your portfolio, and invest for the long term. The second asset that we suggest is real estate. Real estate is property such as land, buildings, or houses. Investing in real estate can be very profitable over time, as properties tend to appreciate in value and provide passive income from rent. For example, if you bought a house for $200,000 in 2008, you could have rented it out for $1,000 per month, earning $12,000 per year. Today, that house could be worth $300,000, giving you a capital gain of $100,000. That's a total return of over 515 years. However, investing in real estate also requires some capital, maintenance, and management. You need to have enough money to buy and maintain the property, pay taxes and fees, and deal with tenants and repairs. You also need to be aware of the market conditions, location, and demand for your property. The third asset that we advise is bonds. Bonds are debt instruments issued by governments or corporations. When you buy a bond, you lend your money to the issuer and receive a fixed interest rate and a promise to repay the principal amount at a certain date. For example, if you bought a 10-year US Treasury bond with a face value of $10,000 and a 3% interest rate in 2013, you would have received $300 per year in interest payments and $10,000 at maturity in 2023. That's a total return of 30% in 10 years, with very low risk. However, investing in bonds also has some limitations. The interest rate and the value of your bond can change depending on the market conditions and the creditworthiness of the issuer. You also need to be careful about the inflation rate, as it can erode the real value of your bond over time. The fourth asset that we propose is precious metals. Precious metals are rare and valuable metals such as gold, silver, platinum, or palladium. Investing in precious metals can be a good way to preserve your wealth and hedge against inflation and currency fluctuations. For example, if you bought 1 ounce of gold for $1,200 in 2013, you would have spent $1,200. Today, that ounce of gold would be worth over $1,800, giving you a return of 50%. That's much better than keeping your money in cash, which would have lost about 15% of its purchasing power due to inflation. However, investing in precious metals also has some challenges. The price of precious metals can be volatile and unpredictable, and it does not generate any income or dividends. You also need to store and secure your precious metals or pay fees to a custodian or a broker. The fifth asset that we recommend is cryptocurrencies. Cryptocurrencies are digital currencies that use cryptography to ensure security and transparency. Investing in cryptocurrencies can be very rewarding as they offer decentralized, fast, and low-cost transactions. For example, if you bought 1 Bitcoin for $100 in 2013, you would have spent $100. Today, that Bitcoin would be worth over $60,000, giving you a return of $60,000. That's an incredible return that you can't find anywhere else. However, investing in cryptocurrencies also involves some risks. The cryptocurrency market can be extremely volatile and unpredictable, and the value of your cryptocurrencies can change dramatically in a short period. You also need to be careful about the security and regulation of your cryptocurrencies, as they can be hacked, stolen, or banned by governments. The sixth and final asset that we suggest is peer-to-peer lending. Peer-to-peer lending is a system that connects borrowers and lenders directly without any intermediaries. Investing in peer-to-peer lending can be a great way to earn higher interest rates than what you would get from a traditional savings account. For example, if you lent $10,000 to various borrowers on a peer-to-peer lending platform at an average interest rate of 10 in 2013, you would have received $1,000 per year in interest payments and $10,000 at the end of the term in 2023. That's a total return of 100 in 10 years with moderate risk. However, investing in peer-to-peer lending also has some drawbacks. The default rate and the liquidity of your loans can vary depending on the platform, the borrowers, and the economic conditions. You also need to pay fees and taxes on your earnings and comply with the regulations and laws of your jurisdiction. And that's it for today, future investors, the 6 assets that are better and safer than cash. We hope you learned something new and useful from this video. Remember, it's always wise to do your own research, diversify your investments, and consult with a professional financial advisor before making any investment decisions. If you enjoyed this video, please hit that like button and subscribe, and leave a comment to our channel for more informative and educational content. Thank you for watching, and we'll see you in the next video. Stay financially savvy,